Welcome to the Creative Minds Smart Money podcast, where we turn financial confusion into creative confidence. I'm Samantha Eck, bookkeeper and fractional CFO for creative entrepreneurs. Each week, I'm sharing my financial expertise and actionable strategies to help you build a thriving creative business. Plus, you'll hear from industry experts who bring fresh perspectives on growing your business beyond the numbers. Because building a successful creative business starts with strong financial foundations. Your next chapter starts now. Welcome back to another episode of Creative Minds Smart Money. And today we are talking about owner's compensation. And of course, owner's compensation is such a layered conversation. I think we've had conversations about this before, but of course, we're going to talk a little bit more and get a little bit into it. Most creative business owners talk about paying themselves like it's a single decision, when it's actually a structural one, with 3 or 4 different vehicles available depending on your entity type. The choice of vehicle obviously will affect your taxes, your business's ability to build reserves, your personal cash flow rhythm, and your long-term financial position. The amount that you pay yourself matters. The structure matters more because the structure is going to compound over years. And getting it wrong quietly costs business owners money for a very long time. So we want to talk about the vehicles that you guys actually use. So let's dive right into this topic and get to it. 3 vehicles that you can actually use. Okay, so first one is owner's draws. This is available to sole proprietors and single member LLCs. Draws are what you take out of your business naturally, something that you can just transfer, a check, whatever it is. Owner's distributions are specific to S-corps. There are things that people take as a distribution. Then you have owner's salary, which is required for S-corps under the reasonable salary rule and standard for C-corps. Now, obviously, you have the structure versus the amount. You can pay yourself the same total dollar amount in wildly different ways, and the downstream impact is very different. Obviously, you have a structure decision that comes first, which the amount decision comes second. And most business owners collapse the second into one and end up defaulting whatever the last person told them was how you do it. Now, when I'm talking about this, what I'm saying is you can pay yourself. If you're an S-corp, you can pay yourself a salary, and you can also pay yourself a distribution. Or if you are a business owner, you could just take a draw. The way that it's treated is very different when you are looking at your business as a whole, okay? So obviously each vehicle is actually very different. So when we think of that, what does it actually affect? So depending on how you are paying yourself, how your business is structured, you have tax treatment. So you have your payroll taxes. If you're an S-corp, you have self-employment tax. And of course, your distributions are taxed differently. Tax treatment is very different depending on how you run your business. Now, I will say this again. I've said this every time. I am not a tax professional. I am not as knowledgeable on the effect of taxes on things. I have minimal knowledge on the effect of taxes of things because I need to as a bookkeeper, as a CFO. But my goal in the end is not necessarily in the tax question or the tax conversation. My goal is to, how do I make you more money? How do I allow you to keep more money? And how do we succeed as a business? So taxes are not my forte. So you definitely need someone to talk about with taxes. Then we have your personal cash flow rhythm. So when the money lands, how consistent does your cash flow feel? Now that's a personal conversation. That's not something that we actually have a conversation with business. And how does the business read on paper? The net income versus the owner's compensation changes when your reports say about your business. We have a net income, but we have owner's pay that definitely changes our business. And that's why we have to look at the balance sheet, right? Because we don't see our owner's compensation on the profit and loss. That's usually on the balance sheet, especially as a single member LLC / a sole proprietor. We also want to look at your ability to build business reserves. The vehicle that you're in depends on how easily profit stays in the business and how easily it does not. So again, when I refer to vehicle, it's more or less the structure of your business. Because if you are a sole prop or a single member LLC, you cannot pay yourself a salary. Like you can't pay yourself a salary. You just take a draw through your business. It can still be considered a salary, but you still pay taxes on that eventually, right? So now, common structural mistakes are that you take one big draw whenever the business happens to have cash on hand. You are ignoring the reasonable salary requirement if you're structured as an S-corp. And this happens so often with clients who are restructuring into an S-corp or they have an S-corp. They think that they could just pay themselves $500 when that's not a thing. And more often than not, that will get you in trouble with the IRS. A reasonable salary is a reasonable salary. It's looking at what people like you are being paid professionally in a corporate environment and determining what's reasonable. So as an example, if a social media manager in, let's say, Facebook is making $50,000 a year, a reasonable salary for yourself would be $50,000 a year. That's not necessarily to say that's what you have to pay yourself, but you need to be talking to your CPA or whoever your tax person is to determine if that is actually something that you can do. The next thing is mixing owners and business expenses through the same account, which makes both the P&L and the personal side hard to read. I've had this conversation before, but there needs to be a very clear separation between your business and your personal expenses. Filtering everything into one account is going to make it so difficult and going to make your business such a pain to deal with. You need to actually be looking at the differences. You need to have a clear separation of your owner's pay, like your personal expenses, and your business expenses. So when you're paying yourself out of your business, you need to pay yourself out of business and deal with any personal expenses in your personal account, not in your business account. And then, of course, one of the biggest problems is obviously setting that structure on how to pay yourself and then never revisiting it, even as the business grows. Now, as your business grows, obviously, you want to analyze if you need to change. Is an S-corp worth it? There's too many times when people transition to an S-corp too early. There's also many times where businesses transition into an S-corp too late. Now, there's a framework for choosing which vehicle on how to pay yourself. And the one that we want to talk about is the structure should match your entity type. Obviously, what's legally available to you needs to match. So if you're an S-corp, you need to do your salary. You need to have the owner's distributions. If you're a single member LLC, you just take the draws. Obviously, again, the framework is your business stage, what the cash rhythm your business can actually support. Are you in the growth stage? Are you in the early stage? Are you in the, mature stage? What stage is your business in? Kind of where you're at. What are your goals for the business over the next 3 to 5 years? Are you scaling? Are you just stabilizing? Are you preparing to exit? That's also going to help you for choosing your owner's pay, how to pay yourself as a business. Then we want to talk about building a consistent rhythm with our business. Even if you are a sole prop or a single member LLC, you want to build a consistent rhythm. You want to pay yourself, whether weekly, biweekly, or monthly, and pick a cadence and stick with it. Don't switch from weekly to biweekly. Don't switch from weekly to monthly. Pay yourself on a consistent basis because consistency matters more than frequency. Your personal finances are going to plan against the rhythm that you are setting up. So that's where we need to be making sure that we're keeping an eye on that. Now, where the tax conversation ends and where the conversation starts with the CFO are different places. And I want to kind of just explain that because, again, I made it clear that I'm not a tax person, that I'm not someone who deals with taxes. So tax implications and elections get their own conversation with the CPA always. So you always want to talk about a CPA on whether to elect as an S-corp, a sole prop, a single member LLC, and then the tax implications of those decisions. The structural question of which vehicle to use in which mix and at what cadence is going to belong to the CFO side of things. And it's a different conversation than the tax one. So that's where we look at, okay, your CPA says you need to be paying yourself $50,000 a year in salary. Okay, we know that we need to have a salary for you're an S-corp, so we need to set up you up on payroll, and then we also have distributions that we can take. And then the cadence is that's the conversation that we have is, okay, how often should we pay ourselves? What works best for you? There are signs that your owner's compensation structure isn't working and that it's not a good fit for you and that you need to be having this conversation. And it's when your personal cash flow feels chaotic, even in months when your business is profitable. Our business is very much tied to our personal side of things, especially for us as small business owners, as people who have a business and also have, personal things that are going on in our life. It's very much tied together. So if our personal life feels very chaotic, that our months are profitable, it's a sign that you need to shift your owner structure. Tax surprises keep happening at the end of the year. Again, that's something that needs to shift. You should never have a tax surprise. Even if you are a sole prop or a single member LLC, you should have a reserve for your taxes that's set up so you're not having those surprises. You don't feel like you're actually paying yourself, even though the business is doing well. That's definitely a sign that we need to be looking at our owner's compensation and seeing how we can adjust that. And you're taking whatever's left over instead of you're paying yourself first with a real plan. We've talked about that before. We have many episodes on why it's important to pay yourself first and not pay yourself with what's left over or pay yourself last. So I would definitely love for you to revisit those episodes if you need a little bit more information. But that's signs that your structure of their owner's compensation just isn't working. When you have a proper structure, your personal finances are going to get more predictable. Your business's cash cycle just is going to make sense. Tax season stops feeling like it's some sort of surprise event because you already know exactly what you need to be setting aside. You already know what you need to pay. And then the compounding decisions of years of owner's compensation start working in your favor instead of against you. Because now you know you're paying yourself. It helps you on the personal side, realistically. It helps you with making sure that people are seeing how much you're paying yourself when you're buying a house, when you're renting, whatever it is. It just really helps. If your current structure was set on autopilot when you started the business, it almost certainly needs a review now that the business is bigger and more complex. The owner's compensation structure conversation is one of the first things I map out with clients when we look at the overall financial picture because we want to analyze and ask ourselves if we want to be paying ourselves how much and why. Once the structure is set right, it stops being a monthly source of stress and becomes a reliable foundation that your personal finances can rest on. Now, obviously, I'm not helping you with your personal finances, but I want to make sure that you are appropriately getting paid for what you need to be getting paid for, okay? The amount you pay yourself matters. The structure obviously matters more because the structure is how the money actually flows out of the business and how it lands in your personal life and how the compounding decisions of years of owner's compensation add up. Choose the structure on purpose and everything downstream gets easier. If you're just going to leave it on autopilot, it costs you in ways that don't show up until you look back and you see the impacts that it has on your business. All right. If you guys enjoyed this conversation, please like it, share it, subscribe so that we can continue to have more conversations like this and I can continue to bring these important topics to light. If you guys ever need anything, please feel free to reach out to me at Instagram or through my email, Samantha@firestormfinance.com. As always, you guys, I wish you the best week ever and we'll talk to you next week. Farewell, my fellow travelers.